Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Scott, I love the breadth of all the interviews we've been having lately. It's just so many different areas, so many different people. But this one area is one of the ones that I think I spoke at that event that you had that was in this sort of sports, gaming, betting, like the whole area of it. And so now you finally got one kind of, in this wheelhouse of deep information and deep knowledge that you have in this category.
Yeah, it was great. Jake did a great job on the podcast, and obviously he is in the hot spot of the industry in sports and gaming and everything else. So he has really, taken on the vertical that has just exploded over the last couple of years.
Right. So we're going to have Jake Kleiner on. He's an investment partner at Bettor Capital, and it's Bettor, Bettor, Bettor Capital. And he was recently with the U.S. Bank as the head of fintech acceleration. So he really understands that fintech space, which is so integrated into that sports betting and sports gaming model. And he also has worked at other equity partners, Vista Equity Partners, leading in software and data businesses. He also has just great investment banking background in general.
Yeah, he brought obviously fintech is very important as applies to, gambling transactions and gaming transactions. And, obviously having that strong background in the industry, it makes it far, far, far better, Bettor, the B-B-T-E-R, better for him to really analyze these gaming companies.
Right. And, this is interesting because he said this term and I had to look it up, which I love that these interviews challenged me to learn something that I don't know about. I had not heard this term before where they were calling it real money online gaming. The real money part threw me because I was like, isn't there always money in it? And evidently there's not. There are some that is just more of like for fun, points, and it's not real money gaming.
Absolutely. Before not too long ago, online betting in the United States had to be non-money, except for a handful of places. And so you have to use the term real money because there is jurisdictions in other parts of the world that it's still not legal for the most part, although it's pretty much legal everywhere now. But the reality is just a few years ago, it was completely illegal to do it, through many parts of the United States. And I think, real money, it is real money. And it's interesting you made that distinction because you're right. There are all kinds of other free to play and other opportunities. Because many years ago, I was in this business and you had to be very careful about the phrases you use and how the transactions took place. And it was a very convoluted process where, the gaming license had to be in one country and the bank and the finance side of it had to be in another country that allowed for this jurisdiction. And so obviously it's a much better playing field now.
Well, and that's why Jake Kleiner's background and what they're doing at Bettor Capital makes so much sense because you're really at that stage right now where this whole industry is at a fintech, real money banking, investment banking intersection, and they're at the perfect place for that. So why don't we hear from the interview and then we'll come back and talk a little bit more about that market.
Well, welcome. My name is Scott Kelly. I am the founder and CEO of Black Dog Venture Partners and the host of the Emerging Managers Podcast, and where we showcase and highlight some emerging and maybe lesser known, but more effective fund managers out there. And great. It's great to have Jake Kleiner from Bettor Capital. Jake, welcome to the podcast.
Thank you, Scott. Thanks for having me on. I'm happy to be here.
Awesome. Well, Jake, why don't you share a little bit about your professional background before you started your fund and, what brought you to where you are today?
Yeah, I'd be happy to. So I am a software and technology investor by trade. That's where I've spent the bulk of my career leading up to and including my time at Bettor Capital. So after graduating college, I worked at Barclays as a technology M&A investment banker for 2 years, and then was fortunate enough to join Vista Equity Partners doing software deals, everything from multi-billion-dollar buyouts all the way down to small early stage add-ons or smaller foundation fund type acquisitions. And Vista being known as a very highly successful and very operationally focused, software only focused firm, was a fantastic training ground to learn and understand and internalize everything about deal diligence process, software business model, best practices, and learned a ton there in my 4 years as an investment professional. And then I got to a stage in life where I wanted to be back in Minneapolis. I'm from here. I'm sitting here today speaking to you from my home in Minneapolis, and I had a unique career opportunity to join US Bank, which is headquartered here in Minnesota, and start and run their venture investment practice. So I was in charge of a group called FinTech Acceleration that was focused on partnerships and investments with early stage fintech and digital companies. So I was able to take the investment experience, the diligence practices and process and business model knowledge I had gleaned from Vista and apply that to a huge 75,000 person firm with varying constituents and areas of focus, and was able to build out a team of 4 and drive a handful of direct investments as well as a couple fund investments with US Bank as an LP for the first time in its history. And that was a fantastic experience. Had an amazing time at US Bank, and I looked around there after 4 years and sort of said, mission accomplished from my standpoint. I was able to get this group running and doing what I had sort of envisioned it would look like, and had brought a fantastic team working alongside me. And I said, one, they probably don't need me. They're crushing it. And two, what's next for me from a career progression standpoint? And that was sort of the genesis of Bettor Capital, which I was able to join the founder, my partner, and my close friend, David Van Egmond, in early 2021 to start and launch our Fund 1.
So tell us a little bit about the fund. Tell us about the fund thesis, where you invest, how you invest, and why.
Yeah, of course. And maybe I'll just continue on the story of how the fund began. Because when I was sort of ready to move on from US Bank and take the next step, I'd reached out to Dave. As I said, we're close friends. And he had been an early executive at FanDuel and then was at Penn Barstool, all in the real money online gaming ecosystem. He had recently left his job and was angel investing, looking at startups in the sports betting, online gaming, online gambling space. And given that I had deal specific, software and technology specific business model knowledge, we looked at a few deals together as angel investors, individual investors. And so we got a few reps as potential angels prior to ever formulating the fund. And we just got to a place where we said, our skill set is so complementary. Him as an operational expert, an early executive at FanDuel with deep industry connectivity and relationships across the gambling space, and then me having tons of repetition and business model knowledge of the diligence process and software companies. We said we should be investing in these businesses in a more meaningful way, leading investment rounds, sitting on the boards, and really driving active strategic impact for these early stage companies in the gambling space. And so from that, Bettor Capital and Bettor Capital Fund 1 was born. We were able to raise just over $100 million for our Fund 1. With the thesis of investing in best-in-class software and technology businesses in real money online gaming, in online gambling. For us, that's across all the verticals of sports betting, online gaming or iCasino, online poker, daily fantasy, iLottery, online lottery, and ADW, online horse racing, as well as other adjacencies. And you should think of us as a vertically focused software and technology fund, and the vertical is online gambling. And so we're investing across the technology stack for the best-in-class companies servicing everything that FanDuel, DraftKings, affiliates, and other adjacencies spend money on, whether that's CRM tools, player acquisition, engagement, retention, whether that's the core betting and betting related or adjacent content, or whether it's back-end payments, compliance, other support and infrastructure. And our entire goal and thesis and value add for our companies and for our investors is we are experts in this space. We live and breathe it every single day. We have very deep North America, in particular, industry connectivity, and we want to be active and strategic and driving the success of the companies we invest in right alongside them in the trenches as we grow and scale across our portfolio.
Fantastic. So I usually ask this question, but it's a pretty obvious question. Why your fund and why now?
Yeah, absolutely. So when we started our fundraise in 2021, and this still holds true today, we said the number one thesis or thematic driven bet we are placing, no pun intended, is the explosion of the North America online gaming TAM over the next decade, where we had seen the tailwinds of states beginning to legalize, of additional access, in particular for online sports betting, but then online gaming, iCasino as well. When we started raising our first fund in early 2021, a low double-digit percentage of the US population had the ability to sign up and place a bet on their phone, a sports bet on their phone. Now that number is well over 50%. We've seen states continue to legalize. We would like to see more states continue to legalize and regulate and offer a competitive product to their consumers. But we've also seen really persistent growth from states where gaming has been legal for a while. States like New Jersey, Pennsylvania, where the product has been available for several years, we continue to see persistent growth. Players love to be entertained and engage with sports betting and betting related product. And we've seen the fantastic tailwinds of that space. At the same time, it's still been legal for less than a decade, broadly speaking, across the online product. And so it is still very much a nascent space in North America with tons of growth opportunity ahead of it, both for continued customer growth, adoption, legalization, regulation, as well as the product itself, and tons of opportunities within that for software and tech suppliers that we want to continue backing.
So yeah, obviously we're recording this just after the Super Bowl. So obviously, that was probably the apex of sports betting, I guess, in my opinion. But where do you see specifically, where do you see the next big opportunities in this industry?
Yeah, the one everyone is hitting on right now is based around personalization, on better servicing the users and servicing them in a one-to-one way as opposed to en masse. And I think that is really important because the way in which consumers by and large do and should be engaging with a sports betting or other product is in a way where it's entertaining, it's fun. And, sometimes you win, sometimes you lose your bets. In the long run, generally you lose more than you win, but you have entertainment and gain value out of that entertainment while you're doing it. And so providing bets that a user finds the most fun or interesting or connected to how they view sports in an emotional, personal way, or giving users a bonus that's relevant to them based on when they want to play, how they want to engage with a casino or related product, adding more social multiplayer capabilities so people can engage in more fun entertainment style ways. That would be a big one from my perspective. And then quasi-related or adjacent is just consumer choice, more product, more depth of product, more markets. You've seen rise of micro markets as it relates to betting. So moving just from will the Minnesota Twins win or lose the game to even is the next pitch going to be a ball or strike? What do people actually want to bet on? What's engaging? What's fun? What's entertaining? What's the type of thing where if you were at a Super Bowl party with a handful of friends, you'd say, hey, I'll bet you $5 that something happens on this next play. And then the wrapper and infrastructure to surround that. And so everything in my view is in service of how do we get a more entertaining, engaging, more in-depth product in the hands of fans to maximize that entertainment value, that engagement, and then of course on the back end have the sort of most efficient, least disruptive infrastructure surrounding it to make the payments rails as smooth as possible, to do all the regulatory and compliance pieces as smooth as possible, to make sure that people are engaging with the product in a healthy and responsible and sustainable ways. We haven't touched on that yet, but really important to us as well. So I think it's a bunch of wrappers around that, but all around that theme of personalization, engagement, and depth of product.
It's interesting you mentioned, placing a bet on the next pitch. Obviously, this last Sunday with the Super Bowl, what I've heard is that some of the biggest bets had nothing to do with the players on the field and the celebrities, what to do with the celebrity singers in the stands. But so talk to me a little bit about Fund One, and let's share some success stories. Obviously, you had some great success, you and your partners, with FanDuel prior to the fund. Talk about some of your winners today.
Yeah, so we're really happy with how the fund has unfolded. So we held the first close of our Fund One in fall 2021. So think of it as we're 3.5 years into a 5-year deployment life cycle. We've deployed a little over 75% of our capital into 13 businesses. Really excited about the breadth of our portfolio and the strength of our portfolio. We've invested 2 or more rounds in 7 of our 13 companies. So when we were out fundraising, we said we're going to aggressively double down on our winners. And we've done that. We've had multiple instances where we've invested an initial check that was $2 to $3 million, and now we have those same companies that are 8-figure positions in our funds, because we're able to help them grow and scale, and very early on in that investment life cycle, and very thoughtfully, sort of meaningfully expand our position across those businesses. Really proud of the sort of breadth across the different use cases that we've talked about, where we have multiple CRM companies in our portfolio. We have a payments business, a couple compliance companies, and then several on the sort of core content, core product side across sports betting, iCasino, and online lottery. So that's exciting. And then in terms of tangible, very early results, there was some really good data that came out last year around the sort of dearth of DPI or fund returns or distributions. And that's an especially acute problem in the 2021 vintage, where it was raising, funds were being raised near a peak, and investors are clamoring for returns. So we're excited that we've had 2 exits already. The first one is completed with funds distributed. We were invested in an early stage jackpot and multiplayer casino company called Beyond Play. And that sold to FanDuel Flutter, which was exciting in particular, given FanDuel is the leader in the North American ecosystem, and it was a fantastic home for our founder CEO in that business, and a positive financial outcome for our stakeholders as well. And then we invested in a live dealer and casino studio business called Stake Logic, based out of the Netherlands. And that company has announced a sale to Sega Sammy, another large multinational strategic player in the space. So we're excited about the opportunity to generate returns for our LPs, to return capital to our investors in a way that, many have found hard in this ecosystem and environment. And we're also excited with respect to both those exits that they're really, really positive early proof points around the strategic value of the assets we're investing in our ability to make an impact, and in the attractiveness of those companies to, large, premium, strategic, multinational acquirers in the space, which is very much aligned with our vision of sort of how the industry would come together in the longer term.
So you touched on this, and I want to spend a little more time on it. Obviously, the last 2 or 3 years have been really tough on the liquidity side, and you may mention that before. Where do you see liquidity happening in general with portfolios of venture capital, and then maybe specifically in your vertical?
Yeah, I'll hit on our vertical first, because I think it is so unique in a few different aspects. The growth profile, the market growth and opportunity, in particular in North America, the tailwinds are just so fantastic that end companies, large suppliers, large operators, many of our potential strategic acquirers of our businesses are not immune from, but are somewhat insulated from sort of broader liquidity or other kind of venture or private market ecosystem impacts. And so we saw DraftKings do several M&A deals last year. We saw FanDuel Flutter do multiple. Of course, one of those was a business we were able to sell to them, which is fantastic. And then we've seen suppliers continue being active in the space, everything from tuck-ins to large billion-dollar deals. And so our belief continues to be specific to our vertical, and with software and technology companies in our vertical, most of our businesses will likely trade to large strategic acquirers, whether that be operators, suppliers, horizontal providers looking to get into the space in areas like payments or compliance, where buying that vertical growth is really attractive and compelling and strategic. So ours is very much case by case, but in general, we're very positive on the landscape of strategic acquirers and the kind of breadth of exit opportunities for gaming businesses. And then as it relates to the broader market, I think it just takes time. It's a little bit of a trickle down, right? Where there's sort of capital locked up and everybody's waiting for returns, and we'll see what happens with big M&A as well as IPO market over the course of 2025, and think that will then over time kind of trickle down and continue to unlock more liquidity from the top down. But our view and our perspective, especially currently investing out of a fund one, and then of course with longer term plans to continue focusing on investments in this ecosystem for decades to come. Our view is, the best way to provide that unlocking of liquidity and continue that life cycle is to, return capital to our investors in thoughtful and positive ways. If we continue to do our jobs, maximize the financial returns to our LPs, return capital to them, the opportunity for that life cycle within a venture allocation, within a gaming allocation, kind of remains strong for us. And it's the type of partnership we want, where we're being the best possible stewards of capital, maximizing returns, but also, maximizing liquidity opportunities in cases where that's what makes most sense for our fund and for our investors.
So let me ask you two questions. One from perspective of an entrepreneur, and then perspective from a potential limited partner or investor in your fund. So from an entrepreneur standpoint, obviously you have a very specific sector focus and industries that are tangent to it. But what other attributes in a company outside of their industry do you look for when you place an investment?
Yeah, and this is interesting, and it gets a bit into something we sometimes tell our investors or the companies that we're evaluating is, we're a venture capital firm because that's the best definition for us, but we operate more similar to growth equity, or more. We like to be very kind of strategic and very deeply involved. And so all that is to say, there are parts of this answer that are very much status quo, what you'd expect from the venture capital industry, and parts that are maybe a bit more growth equity or even private equity, harking back to my Vista days. And so part of it, and a critical must have, is of course the team and the management and the quality of the leadership of the companies you're backing, because we're investing anywhere from 5 to 25% equity ownership of the business. We're not controlling the board. We're not controlling the ownership or the decision-making process. And so we need a very tight level of partnership and a very high level of trust, where we can influence, we can offer our perspective, we can talk through things as a team. And so capability and skill of management team, of course, but then also just trust and relationship building and working style with our executives. And we're fortunate to have a fantastic group of CEOs and executives in our portfolio currently. And then we want to understand from more of the growth equity lens standpoint, what is the core business model, growth opportunity, sustainable opportunity? How are you, or do you propose to grow alongside your customers over time? Because selling into B2B in the gaming space, there aren't tens of thousands of customers that are all SMB to go sell into. It's, how do you continue to add value to your customers and to their end users over time? How is that reflected in the pricing? How clear is the return on investment that you're providing to your customers? How sticky will the solution be? All the software business model basics that justify us saying, okay, we will be able to lean in and help you grow and expand and win business across a bunch of different operators in the ecosystem. And then the sort of third pillar for us would be, we do have boots on the ground and really specific targeted focus and experience in this space. What are people in the space saying about the product, about the need for a solution like this, about the company relative to its competition? And can we get conviction based on our sort of first party diligence and network and relationships that this is a winning team and a winning product that we want to back and throw our weight behind and help them drive towards success in our industry?
So you mentioned earlier in the podcast that you want to be here, do this for the long term. So obviously you're in Fund 1. I'm assuming a Fund 2 is going to be forthcoming at some point in time.
That is the plan for sure. Dave and I are very aligned on this point, and it is, we want to be the go-to private market investors in real money online gaming, and we want to do that for as long as we're working for the rest of our careers.
So on that topic, so maybe share what the profile of your LPs in Fund 1, and then to potential investors in a Fund 2. What would be an ideal LP, I guess?
Yeah, absolutely. So our Fund 1 is primarily high net worth individuals, family offices, folks connected to the sports technology, or even sports betting ecosystem. Illustratively, family offices, professional sports team ownership, high net worth individuals that have some sort of connectivity or broader interest to the sports ecosystem, or see and understand the value in a vertically focused fund that has that vertical specific expertise and is benefiting from the tailwinds of a quickly growing market, quickly growing TAM. And so I think there are a couple buckets you could place us into. One is the vertically focused emerging manager, attractive high growth vertical. We're very focused with specific discipline and expertise in the gaming ecosystem. Another is we are intricately involved in the sports tech and sports betting space. And so how can we be strategic to that subset of our investors that is involved with, entertained by, or owns or maintains asset in that sports ecosystem, where we can say we understand the legalization process in your state. We understand and see businesses that are, betting focused or betting adjacent, but sports tech companies that might be useful or valuable to you as a direct investment or as a customer. And so building a bench of investors who have deep belief in our ability to maximize their returns, but also in a lot of cases are in some way tied into the sports tech or sports betting ecosystem as well.
Well, what are some final thoughts that you want to share with our listeners today?
That is a great question. I think we've hit on a lot of what I want to hit on. I just want to leave everyone with the fact that we're really excited and enthusiastic about the market opportunity and about Bettor Capital's ability to go invest in and help companies drive success from that market. I think back to, and I mentioned it once or twice in the context of sports betting legalization or access, but when we went and raised our Fund 1 in 2021, the building blocks we sort of said we are creating along leading rounds, sitting on boards, helping companies drive to that next level of scale, being able to support them with a second round of capital, being slightly more flexible and stage because we're so vertically focused and so software focused. And so we want to back the best private businesses in the online gaming space, whether they look like a late seed round or whether they're more of a Series B, Series C company. And then the value that we can add commercially, strategically, operationally to this narrow but explosively growing universe of businesses and of market opportunities, I feel really strong and really proud that we're executing on that thesis. And so we're excited to keep going. Like I was saying, we have strong conviction that this is our career. We're going to be investing in the private markets in real money online gaming for as long as we're doing anything. And so for the near to medium term future, that looks like funds of a similar size to our $100 million fund now, where Dave and I can really dig in and be focused and hands-on and really impactful across all of our universe of companies, and can find the right businesses to go drive and lead and scale. Longer term, I don't know exactly what that looks like, but I do know we love this space. We feel like we can bring something differentiated to our investors and to the companies in which we're investing. And, we're excited to keep driving, growing, and building value across the ecosystem.
Fantastic. So where can people learn more about Bettor Capital, Jake, and your partner?
Yeah, best place to learn more about Bettor Capital is our website. It's just www.bettorcapital.com, Bettor, capital.com. People are definitely free to look me up, connect with me, reach out to me on LinkedIn. I'm relatively active and responsive on there. So please feel free to reach out. And we are passionate about the ecosystem, about the gaming space, about our investments in the space. So we're, regardless of precise topic of conversation, if folks want to learn more, discuss more about online gaming, about our strategy within the ecosystem, we're more than happy to take time to do it. We live and breathe it and love it. And so appreciate being able to spill on it over the last 30 minutes or so, and look forward to anything else that comes of it. So again, please don't hesitate to reach out, any listeners, if it makes sense to do so.
Fantastic. Jake, thanks for being on the show today. And for all you guys listening, you can obviously will find us on all platforms. We'll be posting this via social media. So obviously like, comment, share, subscribe. And again, Jake, thanks for being on our program today.
Thank you, Scott.
We were talking at the beginning of this about this sort of deep market knowledge that is needed because the industry is changing so much. And it's really just, as you pointed out earlier, compliance changes just happened, in some areas overnight. But this idea of being a big player in a micro market is so interesting. And that's what Bettor Capital is doing.
And the reality is it's a micro market for a very short period of time. And micro is really relative. I mean, online gaming and sports books have just exploded. I can't remember the number, but it was in the multi billions of dollars bet on the Super Bowl, on the NCAA championships. We're heading into the NBA championships, and there'll be billions spent. ESPN shunned online betting, and now they have their own betting platforms.
Well, and that's what I think is really the most interesting part, is this sort of foray of the larger sports media companies and the franchises themselves. I mean, I had never really thought that MLB was going to go and support any kind of online gambling. I mean, does nobody remember Pete Rose? Right? I mean, I may be aging myself by saying that I remember. I was a kid, but still.
Yeah, it's really interesting how the industry's evolved so quickly, and again, gambling has been around since someone traded a stone for a fish, and the reality is it's just become this massive industry, with all kinds of players at all kinds of levels. And, it's really great that he's been very consistent and specific about his vertical. That gives him the industry expertise and the industry relationships to really take advantage of the growth. And
I think that early stage that he's looking at, being that first fund for so many of them, and doing like the breadth of 100 million in that space was just, it just gives them such ability to get a deep knowledge at where all those changes are happening too. So it makes the next fund and the next fund more valuable. Right. He obviously was helping before it was popular to invest. He was investing. And I think now that it's popular to invest and people want to get involved, he has a strategic advantage. Absolutely. Well, I know this space. I think this was the last live event we did, which was the gaming event that you had in Orange County, and it was at Fullerton or someplace like that. I forget.
Yeah,
where it was.
we did in Orange County. It was in Garden Grove in Orange County, and it was an esports conference, and obviously there were a few people just in the fringes talking about real money gambling.
Right, it was. That's what I was thinking. It's on the fringe.
Yeah, they were in the back tables. They were trying to endorse the industry, and now they're the headliners. They're the keynotes.
Well, and Jay Kleiner and Bettor Capital is leading that charge at the emerging end of that too.
Fantastic. Yeah, absolutely.
All right. Well, Scott, we've got so many interviews coming in so many different areas. I cannot wait for next week.
Me either. It's going to be great.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.